Most traders know how to draw a trend line, but only a few know how to actually trade it. In this video, I will show you exactly how pros catch big moves from trendline bounces and breakouts step by step. If you already learned how to draw perfect trend lines, this video takes it one step further. How to use them for real trade entries. Stick with me as we that. So a trend line bounce setup requires 3 steps. First one being you identify a clean trend line based on the steps I showed in the previous video. 2 or 3 solid touches that are confirmed that took out previous lows or highs. Then you wait for price to retest them. Don't enter early or without confirmation. Let price touch, pierce, or break your market structure and show a change of trend with full candles. So you have to be patient. That's step 2. Wait for price to retest. And the third step is for you to look for confirmation. Now, looking for confirmation is a bit tricky because you have to be patient and you have to be watching price really keenly or very carefully, so you don't end up taking the wrong setups with the wrong confirmation. So what am I trying to say here? When you're looking for confirmation, you want to see price testing previous resistance or supply and resistance or support, previous demand or supply, then your counter trend line and market structure break. These last two, the counter trend line and market structure break, are the ones that actually let you know that yes, this trend has changed and we should start either shorting or longing. So you enter on the close of the candle that broke the market structure. Once the candle shows strength, the candle that broke it, I will show you here in the demonstration here. Enter on the close of the candle that shows strength and the close of that candle. Then your stop loss should be below or above the previous high or low, the safe zone, because it actually avoids noise. Most will call it liquidity. I don't know what is actually previous highs or lows, where most times price don't always get to, unless it's a change in trend. As when price actually gets to these lows, then you target previous highs or lows next to the site level. Me personally, I use previous 1 hour highs and previous 1 hour lows. Those are basic that I target when taking a trade. So let me show you in this next clip here. So this is a demonstration of what I meant on my entry time frame, my 15-minute time frame. This is what I mean here. This trend line was here, there I took this trade, so it should be adjusted here after the trade has been taken, and it's actually moved in my direction. This was like that. This is what I was always thinking. The trend lines don't always bounce. Presents don't always bounce in the trend line rather. If you go to the 1 hour chart now, that trend line is somewhere here. Perhaps, yeah. This is the trend line. This trend line now is here. Before price is tested here and dropped. What we see is the trend line break that's supposed to be buying. These will fake out core. I will also elaborate more on this in the next video. After that break happens, this is the next zone to drop the trend line. Now on this chart I took, it's more like a trend line break. However, I will also tell you I don't trade on the trend lines. I trade trend lines blended with not psychological levels. Trend lines with support and resistance and supply and demand. I do use psychological level, but I don't think that's a thing. I just use it sometimes for conferences. So price comes back here now, and after this sale, I have this here. So this trend line is here. Back to what I was explaining before. Back to what I was explaining before, right here about this point. Yes. Now this right here is the break of the previous structure. Often this is a clear break here. 1 hour is a clear break, full body break here. This is the break here on 1 hour. This is a full body break here. This indicates strength and shows signs of this level being a high probability, no, not high probability, because I don't also think high probability or high quality or how I put it. I don't think there's anything like high probability trades because you don't know what will happen. All you know is quality setups that you see your edge play out and it's clear, it's readable, it's understandable. That's what I know about. So right here, price did this here, had this fitted, had this break here. This break was pretty clear. So let me go 15 minutes and explain further. So this is it on 15 minutes. Now what I do is I wait. I want to see the market structure that traded back to this zone or level. So I employ my session break or session indicator right here. Then I want to read the structure here. Now for this setup, this structure actually the just started the day after this drop, like it's then the same day this drop happened. So we have this impulse correct. We have two types of correction. We have ranging correction and trending correction. This is origin correction right here. Trending and ranging the same treatment. So after that, and I have this here. This broke above this high, so that's why I marked as a high. Price did this here, and also give us here. Tested again, and boom, we have this high. So from this high, what I do is I mark out the low, the close, not actually the close of the body of the candle. For here is a sell candle. So yeah, a sell candle. So I mark out the close here of that candle. If I zoom in further, you see it clearly. Let me move this one first. So I mark out the close of this candle and prices and wait for price to break it. This here is a market structure break because this was the last low that took out the previous high here. So when price breaks this low, it's an indication for me that bro, sell is about to start. And that was what happened there. The day price took out this low. Price took out this low and I was like, yes, it's about to start. So the moment I saw the break here, I hopped in on this sell. My stop loss initially wasn't here. So this was what my stop loss was after I reduced myself because one of my treatment rules are as price gives me 1:1, I have my stop loss. So what I use is a method or strategy system that I used to protect my capital. So my stop loss was above this zone here. I didn't take it below, it was supposed to be 8 pips or so because if I take it to 8 pips, price won't read when the TP hits. So I've marked that the stop loss has already been taken. That's why less than 13 just here, just above here. So my stop loss was around, so it was 18 pips or so. Either 18 or 19, I can't really recall. So I reduced the stop loss. You see, it was just a few pips above this high here. So it was a few pips above the high. I can't remember the stop loss that I used here, but it's in my journal. You can check it out, see it. So price did this here, and this was it. I just kept the stop loss. I've had the stop loss then when I was at 1:2, because this trade actually gave me 1:4. So when I was at 1:2, no, it wasn't 1:4, it was 1:3 that this trade gave me. So when I was at 1:2, I moved the SL completely and carried on. What I'm trying to explain here is actually this trend line bounce of the head. You see that before this setup, what scenario happened here? We've already had a trend line break here, which is if you have marked this trend line with what it was supposed to be with. What I'm trying to say here is that for you to catch trend line bounces, most times you won't catch them inside this bounce because you don't know how far price will choose to. But you will catch them slightly above the trend line. That's why every break of a trend line is not fully a break until you see price take out the previous market structure. Let's say price will sell it just like this. And even this break came here now and took out this previous high. It's full body candle. I'm looking for the sell again. I'll be like, okay, it seems like the trends are about to change. So I have to be patient now and watch and see what price has to do next. The price didn't break it out from there. Instead, price rather just broke above the trend line from what was previously. Then broke below this one, market structure and all sorts of stuff, and came down. You see. So that's why most times people think trendline bounce. I actually see it as a thing, but I trade this trendline. I keep trendline here to always tell me current trend that we're on. So let me show you the next one. So on this day here also, price broke out of this previous support that turned to resistance. It was a good break and it was strong. Now if you also watch this trend line here, it's not also in line. You see actually a trend line bounce. That's why I always tell you, understand market structure, then blend your trend line break with your bounce. It will be more understandable for you when you blend your counter trend line and with trend line, which is this one and this one. So you're not only trading the bounce, because most times, I don't know, people like cool looking charts. We are not making money. It sounds funny, but it's also serious. Your goal here isn't to have cool looking charts. Your goal here is to understand the market is saying, the market's language, and make money off of it. Not having cool looking charts. There are people that most times the trend line bounce isn't always cool, it only makes sense. But like blend the trend line bounce, but also know that you're not a market maker, you don't know how far these charts will go. So you blend it towards a counter trend line, so that when breakout happens at the right session, you're able to you're able to take advantage of the opportunity. So this also here. After this here, you have this high here, which is not also a level market direction, and you bring it here. Now even if you keep pushing it, you don't know if price will bounce off of it. Because even looking at this, most people say this is second touch here. But this same trend line had touched. But this same trend line had touched here, touched here, touched here, touched here for coming here. So on this trade here, I believe greed also played crucial part in the small profit that I took here. So I was on this trade here, this 15-minute chart, and this market structure here also. For me, it's readable, for some people it's not. Because I have 3 ways of looking at these retracements. The first one is simply pricing something like this, because I checked out here a lot. Pricing something like this, impulse, correct, impulse. Then I wait for the break here to enter. Or price does something like this, impulse, correct, impulse. Now wait for the break here to enter. Or price also does something like this, impulse, correct, impulse. And also the break also from here to enter. I'm not supposed to say this is M pattern. That's how we see that is as market structure. And when I was taking it for what it was for M pattern, I didn't actually make money with it, because I still understanding as market structure. I make money with it these days. So this is it. For me to enter earlier, to have an earlier entry, to be able to make more from the market, was entry on times. That's also something. I actually use this style of entry. I enter from this popular mini trend. I see it as structures. I saw this trend here of 15 minutes. So this is basically the trend here, the retracement of 15 minutes. This is the level of the sun runner, and this is retracement. This low created this high here. I created this low, I created this high. Basic. I understand this. For me, this is a quality trade setup. So after this, I enter from this break here. And almost you will be like, why not enter from this low? Yes, it's for me to enter earlier, because this low created this high that took out, that created this low, took out this high, created this low, that took out this high. You see, so for me, this is more like a faster way to enter. And I've experimented this several times and it works. I was able to get in from here. This wasn't also my SL. My SL was a bit high. I reached my SL. I was targeting below at this point here. My SL was it 10 pips? Yeah, 10 pips. I was targeting 20 pips. And for me here, okay, this was the SL actually. I didn't reduce this one, because if I reduce it, it won't show up here. So I started to fall like on the previous day. And sometimes it doesn't happen. It wasn't wrong. But then I saw my ones to I refused to take profit. Rather, I reduced my stop loss. As well as the two, I broke even and did the needful. The price came back and took nothing, small profit. That's still okay by me. So this is all about trendline bounces. Trendline bounces don't always work. Like the trendline has to be it only looks cool. It works, but it only looks cool on some charts and after the trade setup has played out. You know, every time that you see those setups play out, how you expect them to play out, like you mark a zone and market just comes to like magic and drops. It doesn't always work. It doesn't always work. For me, I don't know if some people might be doing it, but for me, it doesn't always work. Is what I do. So for trendline break, it's also the same thing. Patience is also there. Wait for a strong break candle. Should close clearly beyond the market structure of the trend line, which is what I showed you here. This was the last low that created the previous high. Should close clearly below this low, which is what happened here. Then we should confirm momentum, which is also the strength of the closed candle. Then the entry. There are two styles of entry. Either wait for immediate break, which is what I actually do most times. Though I don't always trade only trendline break because of fakeouts, which I've learned from in the past. I add it market structure break. So most if it was trendline break, the ones you saw this red candle that closed at this, you should have entered, but no, I wait for this one. So there's also another one, break and retest. You want to see this break, you wait and wait for this retest and enter my next bearish candle, which is this one here. You see. So that's break and retest. Then you place a stop above the previous high, which is this high here. Then you take profit at a next key level, which is actually this low here. The same thing applies to this one. This is my previous, my most recent ones recently, and most recent trades. So it's only like I'm showing just one. So this was my most recent trades. I will go back and show you this on my journal and Telegram, but these are my most recent trades. Something happened here from here. You see here, there was no drill, and the moment you enter from this break, boom, you're in like mad profit and it's going down in direction. Good. It doesn't always happen all the time. So I prefer using the market structure. This will also give you a faster entry. I prefer the market structure. So that's all about trendline breaks and bounces. It takes time to understand this strategy, and you should be very, very humble and willing to be open to learn new things for you to understand this strategy easily. You should be able to do the hard work of journaling and being honest to yourself when you take losses. It will also go a long way in helping you. So that's how I trade trendline bounces and breakouts like a pro. There's nothing more to it. Trading is actually simple in terms of strategy and understanding. The part that is hard is for you to understand that strategy in your own way and the psychology of that strategy in your own way. So in the next episode, I will show you how to combine trendlines with key levels for high risk to reward trades. Please subscribe, drop a like, keep mastering the trend with the Invictus talisman. So I don't know, this series will actually help most of you. We'll just try and kill him. Thank you.